All right, let's face our fears as we saw some heavy market volume as of last week, especially with Japanese yen crosses. I am going to first look into the Forex factory for this trading week to see those high impact news announcements that we have waiting for us. You can see a few high impact news announcements there. Well, they are. We don't have any interest rate announcement, and we don't have the NFP as well. So just take note of all of these high impact news announcement as you trade, especially if you're an intraday trader. Okay. All right. Now let's look into the charts. Like I said, the Japanese yen crosses as of last week. We saw some heavy momentum with some breakout. All right, almost all Japanese yen pairs made some breakout. As you can see in the American dollar against Japanese yen, we saw that two momentum bars right there. For 2 weeks, price just pushed to the upside, breaking free from what looks like a flat top triangle here. All right, a flat top triangle. Let me use a standard trend line. Okay, to the downside right there. Okay, now in this breakout we didn't get the opportunity to even jump in. There was no opportunity to take that right to the upside even from the lower time frame. All right, you see how price just cruised through that level in the daily time frame with that breakout, and then it seems to be taking a breather right there in the forward time frame as well. There was no breakout pullback, a continuation pattern of that level, so it was a straight breakout that we got in the weekly time frame. So since there was no valid entry upon that breakout, what do we need to do? We need to wait for price to make the pullback, then we'll begin to rate price action around that level again for possibly a continuation move. Now price is far away from the breakout axis. You need to wait for price to make that pullback. Okay, taking any entry high up there will be quite risky because price may make a turn to the downside. So we are still watching this pair because there is absolutely nothing valid for us to get on board right now. Price may be facing resistance. If you connect all of those highs, price may be facing some problematic levels around that area. That is why we are really not going to take any blind entry around that zone. It is best to wait for price to make the pullback, then read price action around that area to look for continuation moves. Right, if there are no bounces, then we may have a fall back down. For now, I just want to show you that flat top triangle breakout and the course of action waiting for the pullback that we are expecting. Okay, let's look into the American dollar against the Swiss franc. Last week I shared this chart with you. You can see the sideways bias. All right, for so many weeks price just kept going sideways, which is an extremely difficult condition for us to trade. With that sideways bias, we didn't find anything to trade for quite some time. All right, we didn't find valid price action to trade as price was just flat. Okay, in fact we were expecting to see a breakout pullback then continuation move, but what we got right off that area is now a fake breakout. Right, a fake breakout. Let me put a standard line there. Fake breakout of that level. Keep it there. Okay, I wouldn't want to draw the triangle. I'll keep it as a range. Okay, even though we have higher swing highs right there. Okay, so we may be having the possibility of a channel as well. Okay, so price is actually more to the upside. All right, and that is the reason why I may not be trading this fake breakout. Even though it looks valid, we may get price come down to somewhere there, then again begin to push to the upside because we are having higher swing highs and higher swing lows. All right, price seems to be pushing to the upside anywhere around in there we could see another bounce again to the upside. But for now, this is I think I'm having some network issues. Okay, for now this is a range and an attempt to pull through. We got a fake breakout, a valid fake breakout. Price may make that push, okay, but it is a bit risky given the fact that we are seeing higher swing lows and higher swing highs. It may come down, but somewhere in there may bounce back up. Okay, that is the reason why we may not be trading the American dollar against the Swiss franc fake breakout in the daily time frame. All right, so in the in the weekly time frame. In the daily time frame, you can of course see that fake breakout right there. Okay, it pushed as if it was going to pull through, then it fell back in. Now if you look into the daily time frame, you will see those levels. These are problematic levels right there. All right, so like I said, price may come down nicely to that area, then it will face that level of support, and from there on we may get a bounce again to the upside. That is why we should not be taking that trade. It is a valid setup in the weekly time frame, but we will not be considering that for that many reasons. Okay, all right, so that is it. I just want to show you that it's a difficult market condition, really difficult one, but there is nothing we can do. Now looking into the Australian dollar against the Japanese yen, one of those pairs that we analyzed last week. In fact, I was surprised to see price pull through that level of resistance, which seems like a confluence zone. All right, this breakout happened mostly across the Japanese yen pairs. You see that key level of resistance that we analyzed previously, and then we looked at this higher swing lows and the possibility of a higher swing high, maybe a fake breakout around that point of confluence, possible confluence, but it didn't happen. So it is only this momentum that is needed to push through that problematic zone. All right, so it did happen against our best interest, and right now this level that once acted as resistance may now be acting as support. So price is expected to make a pullback to that zone. That is where we'll be looking for bounces or a fake breakout for price to come back down. For now, price is high up there. We will not be taking any trading decision. We will not be taking any trade. All right, not trading is a trading decision, so I will be correct to say we will not be taking any trade high up there. At best, we want price to make that pullback to that zone which acted as former resistance and may now act as support for us to look for bounces to the upside. All right, so if it does come back down into that channel, then we have a fake breakout. All right, we have a fake breakout, and we may likely see more pushes to the downside. So whatever happens here now, we will keep our eyes watching the chart. If you see the daily time frame, you will see that breakout, right? See that massive breakout, 3 candles without any pullback, no opportunity to get on board. All right, no opportunity to get on board. We just got a breakout and price simply pulled through. Well, let's believe this is an exhaustion point and we are going to see a pullback. At this area, we'll be reading price action more closely. In the Forex time frame, nothing really. Okay, just a straight breakout, a little bit of a pullback there and a continuation. Right now price is going sideways again, so really nothing. Just want to show you this and give you some caution that this is a high that you don't want to go long. Wait for the pullback, then you can decide around there. All right, looking into the Swiss franc against Japanese yen, one of my worst nightmares right now. This is the outer trend line. We did analyze that, and it seems the pattern that our pattern is playing out. All right, that channel formation is playing out. That is the optimal pattern. Price took off. All right, then it's now channeling. Although the ultimate hint of this channel is that price will crash down, okay, but when will it crash is what we do not know. It may go up, come back down, go up again. All right, it may crash as well. So last week, just like we saw in all the Japanese yen pairs, that momentum push, we saw it right there. That's the heavy push. Okay, price is now approaching that key area of resistance right there. So we'll be watching price action very keenly around this area to see what happens at that point. And this is not a good area for you to hit on your buy button as well. So it means most of the Japanese yen pairs are trading around their areas of resistance. And so from here on, we'll be watching to see if we get a bounce to the downside. And if we get a bounce to the downside, this is the next key level to watch, either for a bounce to the upside or a breakout to the downside. All right, this trade breakout is not tradable. It was really unexpected. In the daily time frame, you can see how price just simply cruised through all of those levels that we had kept. It seems it behaved as it respected it, then it pushed through. Well, that's it, that breakout. Let me just keep this level of resistance here, the one we have. This ones now can go. I think they have done their part. The pattern that is playing out belongs to the weekly time frame, this channel right there. All right, trust me, everything that is happening is just around this channel. We may get a bounce. Chances are that we are likely going to get a bounce at the upper boundary of that channel. Now the Canadian dollar against Japanese yen, another worst nightmare for me. Let me take out this let me take out this. You can see we analyzed this last week, and then after much of range right there for several weeks, price now made that heavy breakout to the upside. Let me zoom in for you to see very clearly. Remember last week we talked about this very momentum bar, all right, which was a hint that hey, we may be seeing more momentum pushes to the upside. Well, the breakout has now happened off that level and even off the weekly level of resistance. Price is sitting high up there. Again, on the Japanese yen pair, that is not a level that you want to hit on your buy button. All right, price may also be facing some resistance around that area. Let me just see if I can show you that. Right there. Okay, let me take out this. Okay, and zoom in this chart a bit. All right, so now if you connect this high, this is a counter trend line. All right, that bounce right there. Okay, and price is going back again. That may act as resistance. That is another reason why you should not be hitting on your buy button against that level. We may see a bounce back down. All right, a bounce back down, and it might be a heavy reaction. All of these might be priced, the market movers, to take out all possible accounts before they drive price back down to the outer trend line, which is this one right here. So watch this area, be careful, don't hit on your buy button. Let's watch and see if price pushes above, then we could wait for a pullback. From there on, we could search for another bounce to the upside or a fake breakout. For now, price is facing that level of resistance, and you want to be very hesitant hitting on your buy button against that level. In the daily time frame, you could also see that straight breakout. All right, straight breakout to the upside. No opportunity to go long at all. Where I think this is deliberate by maybe by circumstances of fundamental events, and so we have gotten price push that way. Well, like I said, it's my worst nightmare. I didn't expect this type of behavior, but it has happened. So I'm going to be watching price at that level of resistance to see what is going to happen. Okay. All right. Every other pairs, many other pairs. Let me just randomly pick some regular pairs. Okay, for the Australian dollar against the Canadian dollar, there is nothing to analyze here. All right, price is just swinging up and down. no clear directional bias, so there is really nothing to analyze there. In the sterling pounds against the American dollar again, well, again, maybe price came back to retest resistance, but that is not enough. If you combine the last two weekly candles, okay, you may likely have something that looks like a pin bar, and hey, this is level of support. We may be seeing price pushing to the upside, and so we don't want to get involved looking for bounces to the downside. In the daily time frame, you could see the confusion that is going on right there, right? So we don't want to go short. Again, if you try to put a trend line somewhere around in the air, right, connecting that point on this one, you will see that price, if it comes down, maybe facing support again, it might push to the upside. And so with this mess right here, we don't want to go short. At best, we'll wait for this level to be taken out, then maybe get a pullback for price to keep pushing to the upside. There are many of those pairs, all right, many of those pairs, but really worse market condition. In the Australian dollar against the New Zealand dollar, just look at that. Look at those type of candles. This is really not tradable. You can see in the daily time frame, I have anticipated a possible channel, and price seems to be bouncing off that channel. Well, we'll be watching this in the 1 hour time frame, where we have this key level of support. Okay, that key level of support. If it does break to the downside, then we'll be looking for pullbacks and for a continuation move. But for now, the entire charts are just a total mess, with erratic breakout in Japanese yen pairs, which are really not tradable and quite painful to see those type of price behaviors. Okay, all right, thanks for watching. I will keep you updated as the market pan out. I'll talk to you again. Please do not hesitate to subscribe to the YouTube channel, join our Telegram channel, our WhatsApp group, so you can get regular updates about the market starting from this week. Enjoy your day. Bye bye.